Hi, welcome back. Today I want to cover the macro models we've been looking at. We've already looked at the circular flow where we have the goods and services market, G plus S, the resource market, businesses, and households. This represents an economy, and the model reflects the flow of dollars in exchange for resources. Next, we looked at the production possibilities curve. This model represents what an economy can produce given trade-offs. And at the highest level, you're basically making choices between big groups of items. So in this model, it's reflecting guns or defense and military spending versus butter or consumer spending on things now. And there's a trade-off. So it shows the trade-off due to limited resources, capacity constraints in the short run for an economy. Over here, we're looking at a business cycle graph. On this graph, we're measuring real GDP. GDP represents the total value of everything we can produce given these resources that we have. The trend over time, so we're measuring GDP to time, shows growth over time. So this is a long run picture of business expansion, contraction, expansion, contraction. Then we have the market model, supply and demand, a basic model for studying economics. We can use it to study the goods and services market, G plus S market. The market model has a supply curve, a demand curve, price on the vertical axis, quantity on the horizontal axis. We can use the supply and demand model to study the money market. So these are all market models based on a market economy. In the money market, we have price on the vertical axis, quantity on the horizontal axis. The price of money will be an interest rate. We can use the supply and demand market model to look at a labor market. In the labor market, supply of labor, demand of labor. The vertical axis is price. The horizontal axis is quantity. The price in a labor market is a wage. You can use a market model to study any market, like the stock market. The stock market is not representative of the economy, but it's an indicator of what's going on in an economy. So you could have supply of stocks, demand of stocks, price on the vertical axis, quantity on the horizontal axis. So this is how the whole economy can be represented in some simple models so far. Come back and we'll be digging into more on the business cycle and looking at these markets here, which are the simplified version of supply and demand. And then we'll be moving into the macro model of aggregate supply and aggregate demand. That'll be for another lesson. Thanks for being here.